Welcome to etvFutures.com. It's Friday, October 26th. I'm Remy Hokie for your Commodities Recap. NYMEX crude oil futures ended at a new record high. Worries about energy supplies and geopolitical tensions in the Mideast lifted prices to an all-time high. December crude rallied $1.40 to end at $91.86 a barrel on the NYMEX. Earlier in the session, the benchmark contract hit a new record intraday high of $92.22 a barrel in an electronic trade. NYMEX crude posted a gain of $4.91 on the week from last Friday's level of $86.95 a barrel. And in another NYMEX trading, November RBOB gasoline added 3.82 cents to end at $2.2740 a gallon, and November heating closed at $2.4325 a gallon. Meanwhile, November nat gas rose 3 cents to end at $7.218 per million BTU. And over in the metals complex, gold futures ended at their highest level in nearly 28 years. Record high crude prices as well as a weakening dollar boosted prices for the precious metal. Earlier in the session, gold hit $787.80, its highest level in nearly 28 years. December gold rallied $16.50 or 2% to settle at $787.50 an ounce. Gold futures advanced $19.10 on the week. And in other metals, December silver rallied 37.50 cents to end at $14.28 an ounce. This afternoon, we're joined by Derek Frey, head trader at ONF Futures and Options. He'll recap today's session in energy and metals.
Okay, recapping the action we've seen this week in metals and energy sectors, and what a week it's been, obviously. I'll start with the energies. Seeing crude oil push very close to all-time new highs, even when adjusted for inflation. The highest adjusted for inflation number that we've ever seen was back in 1981. It was $93.09, again, once you adjust. And we're just, pennies away from that at the high today. Obviously, this is on the back of the situation in Turkey and Iraq, as well as the situation between us and Iran that just came about this week. And when you put those two things together and then add in the huge draw that we saw this week in the API data on Wednesday, that's obviously been the catalyst that's pushed us to these lofty levels. Looking ahead, we continue to see this trend up. Really continuing on for the foreseeable future, unless, of course, the situation with Turkey and Kurdistan becomes resolved. And obviously the wild card is still whether or not, or what, I should say, Iran is going to, or how they're going to react to what we so that's certainly going to be an interesting situation looking ahead. So I definitely would advise people to not get in the way of this thing from the short side. We were short and have covered and reversed and gone long because obviously this situation is new information. So, and then the final piece of the puzzle, of course, is also the weakening dollar. We saw that hit, I believe, 40-year lows today, or at least all-time new lows on the current contract. So all of those factors combined are what are the pieces of the puzzle that have pushed this market above 90. And frankly, I wouldn't be surprised if we see $100 hit, believe it or not, as early as next week or sometime before Thanksgiving if the current tensions continue on. Moving over to metals, pretty much all of the same things that I just said for energies would apply to metals. You're seeing the gold market approaching 800 and silver clawing its way back towards the $15 level. Frankly, I would expect both $800 and $15 to be tested either next week or in the fairly near future on the backs of all these geopolitical situations, as well as, of course, even more important than geopolitical right now for gold is the dollar. The fact that the dollar has hit these new lows and gold has hit that is all of these markets signaling the expectation of a Fed rate cut on Wednesday. The consensus is obviously that they're going to cut 1/4 of a point, but the Fed is in a pretty tight spot because they're trying to balance helping out the crippled mortgage sector, and at the same time they're also supposedly against inflation. So they've got a pretty tough meeting ahead of us. This is by far going to be the most important FOMC meeting that we've seen in many, many years, and probably for many years to come. So I would definitely advise people to get ready for a wild week next week. It is not the time to be asleep at the wheel, and it's also not the time to take undue risk. You definitely be extra cautious when you're trading next week.
That was Derek Frey, head trader at etvFutures and Options, with his commodities commentary. I'm Remy Hoki. Join us later this afternoon for PM Exchange right here on etvFutures.com.